We keep the view that China is in this permanently low inflation for the long haul, actually, because the monetary response from the central bank has been very mild. The financial consolidation in terms of the commercial banks has been deepening. So for the banks, they're reluctant to issue more credit, and at the same time, food prices are going down. For domestic demand, it will be a long time before we see a meaningful rebound because the housing downturn is still continuing. So as a result, I think the current low inflation would continue. The domestic orders and foreign orders both decline, but the foreign orders actually hold up relatively well, given that the major Western central banks are entering this cutting rates of the cycle. That could boost China's export in the long run.
How much deflation do you think the policymakers are willing to tolerate at this stage? Because there has been some argument that I've seen out there, a view at least, that maybe they are tolerating some deflation as they see this as sort of necessary pains for their long-term structural goals.
Their tolerance is very high, I have to say, because there are several constraints. One is that they have to defend the valuation of yuan. So given that, they cannot really cut the rates substantially. And the domestic financial system that desperately needs some reform. So the smaller commercial banks are highly exposed to the housing market, and we have seen a faster consolidation since the second half of last year. And as a result, we have seen this heightened effort to maintain financial stability. We expect actually more clarification in the third plenum, which is coming in a week. And by then, I think the market would have a better understanding. But we think this low inflation environment could easily carry over to throughout 2025 or even beyond.
And how bad is this deflation in China? Because deflation typically is seen as a demand killer, but how bad can it really get at a time when the consumer is either way weak because of many other factors?
There is no mysterious reason why we're in the current low inflation environment, because given that the housing bubble has bursted towards late 2021, then it has brought down the domestic investment and then consumption and then the overall demand. We now, in our best case scenario, think that by the end of 2025, the housing market can stabilize. And even then, probably the domestic demand will still remain weak. The central bank is unwilling to really cut rates to boost overall demand because they have this long-term agenda to focus on strengthening the supply chain. And there is a shift from focusing on consumer market and services to this industrial sector. And during this transition, the inflation is expected to be very low because there's very limited room for the central bank really to do monetary easing.